Hey guys, Mark here, and today, and learning a little bit about business, we're going to be talking about IPOs, initial public offerings. All right, if you're studying venture capital or you're a company looking to sell, become publicly traded company, there's some things that you should know before you go into it. Because sometimes it's a good thing, sometimes it's a bad thing. So what we're going to go through is the pros and cons of an initial public offering. For those of you that don't know what an initial public offering is, an IPO, it's when a company goes public. They start selling shares on the market. So you see them on the Dow Jones, the far along NASDAQ, the FTSE, all kinds of the CAC, all these stock markets around the world. All right, they have gone public, so you can buy some of their shares out there. Okay, so what are some of the pros of going public? Okay, of having an IPO. Also remember, initial public offerings are the first time that a company sells stock. They can sell more stock later, but that's not an IPO. An IPO is the very first time it happens. All right. So what are the pros? First off, we can raise money. You can't do it all on your own. You need to have some extra money out there, and an IPO brings in a lot of cash into the company. Okay? Yes, you have to give away part of the company, but we're getting money so we can continue forward. Because a lot of companies, they run out of the resources. They can't get any more loans. They can't find any more venture capital, so they have to go public to raise money. Number two, also, it opens new ways to raise money. Yes, you get the IPO, so you get that cash, but banks like publicly traded companies. Bond markets like publicly traded companies, because then you're getting more analyzed, so they say, hey, this seems like a good company, I can really look at it, so yes, I will give them money. I mean, think about it. Wouldn't you rather lend money to someone you can learn a lot about than someone that's in the dark and kind of mysterious? So there's another one. Number three, you can exploit a market. Okay, basically what happens in IPOs, it's definitely a boom-bust market. There's either a lot of them or very few of them. If you look at 99, companies were going public that shouldn't have gone public. The reason I did is because people wanted an IPO. They were like, hey, tech companies, you're a .com, okay, you got to go an initial public offering, you make millions, hey, we have to do it. And sometimes that's what you do. You say, hey, you know what, maybe we're not ready, but guys, people want to pay us millions and millions of dollars for our idea, let's do it, okay? So you can exploit the market for that. Also, another thing is, if you go public, it increases your visibility. People will know about you. They can see your stock symbol going by there. Okay, Kramer starts talking about you on Mad Money, saying, hey, you got to buy this stock. It's out now. Okay, it gets it out there. Some stocks have gone public just for the visibility. Amazon, they didn't need to go public. They had plenty of money. There was people lined up. They're like, here, don't take our money first. And they said, no, we need this IPO just to get our name out there. So it can increase your visibility. Also, number five, for the original investors, it gains them liquidity. They can sell out their shares. They can say, hey, you know what? I've done my part. I helped this company get going. Let's sell it so I can get some money out of it. All right, so that's one of the good things. You can get out and make some money. Now, there are some kind of negatives. There's some cons to an IPO. First off, it is very expensive. To get all your documents in order, get everything in order to be ready to be accepted and to be sold, it takes a lot of money. Sometimes it costs up to 10% of the money you're going to make from the IPO will go just into getting ready for it. Because it takes time, energy, and a lot of money to get ready for an IPO. Number two, as all the big buses go by, number two, it may fail. You may get everything ready for an IPO and then no one wants to buy it. Or it gets pushed back, and the IPO fails. If that happens, it destroys the reputation of your company, and therefore, even if you have a good product or service, it can destroy that as well because, oh, their IPO didn't work, so there must be something wrong. So there's a con there. Also, the third thing, which happens a lot, you notice if you'll see when IPOs come out, a stock is priced at like $15, and then it goes up to $40, and you're like, wait, so why didn't they charge it at $40 in the first place? Well, what that happens, it's called underpricing. And that happens a lot of times in IPOs. They underprice it to make sure people will actually buy it. Then the stock goes through the roof. Okay, so what's sad is for the company, we don't make as much money as we should. So to stop that, make sure you increase the valuation as much as you can before the IPO. Okay, so then you can get a higher stock price. Okay, number four for the cons of going public, the cost of staying public. Guys, it's not free to be a public company. You have to fill out all the forms, you have to pay all the fees, you have to get all the regulators and all these things. It's not cheap. Also, you have to send out all your monthly reports and your quarterly reports and go on the shows and all these things. It's not free. Okay, number five in the cons. Your management now has to worry about the stock price all the time. You go into these .com companies, these things, you go inside, they always have the stock price right on the top showing you what's going on. Yeah, because now we're focused on the stock price and not so much on getting our product. And if you're a new company, usually the CEO is really involved in getting the product going, and they don't have as much. Now they have to spend their time dealing with the shareholders and the stock price, and not so much with running the business. Okay. And number 6, going of the cons is those people from the outsiders. You have to deal with more bullshit. Okay, more BS. You got Kramer saying you should do this. You have people at CNBC saying something else, and Bloomberg saying something else. You have a lot of other influences coming out there, so therefore the company may get a little put off. Okay, so those are the pros and cons of an IPO. Some last little things to remember about an IPO if you're a company. First thing, look, are you really ready for an IPO? Can you deal with all the stress, the vigors, and all these things? Because if you're not, then don't do it, because it can really destroy your company. Okay. Also, make sure you take care of how your company's valued. Do whatever you can to get the value up so people will do more. You see some companies, what they do is they'll sell memberships for extra years beforehand to get more cash in there, because they don't have to show all where the money came from. They say, hey, this is what our sales were. It doesn't matter if it's a 3-year contract. They pay it all up front. Companies do these things, guys. I hate to tell you this. People play with the numbers, okay? It's not just big banks. It happens all over the place, okay? Also, what size do you have to look at? How much of the company do I want to sell off? Do I want to sell it all off or just a part? Because as a company, and as the owners, you probably want to know, I want to keep in control. So you have to look at how much you want to sell off, okay? And then also you look at where you should list. Okay, some people, I want to be on NASDAQ. Well, the thing is, you want to be probably in the market that's closest to you, okay? Because people will know that company and they want to invest in that company. My hometown, they had a couple of companies there. They were listed, and so they said, hey, you know what, we're listed, and we're going to try to sell just to our local market because they know us. And that made a lot of people where I lived a lot of money, okay? So you look at that. Who are going to be my clients? Who are going to know my company and going to buy those shares? So you want to list near them. All right. So those are the pros and cons of an IPO. I'm here at the University of Aberdeen for a little visit. My family's from here, and this is the old King's College. Anyway, well, I just want to show you a little bit. I hope you learned a little bit about IPOs, and I wish you good luck in your venture or your venture capital class or whatever. So